coming this morning. So daily market wrap for Thursday, 23rd of July. So some announcements from Alphabet. So they beat the earnings expectations. Revenue up 24% year on year. What does that mean for the broader, I guess, tech space in general?
Yeah, so I mentioned in my wrap yesterday that the two big earnings reports coming out overnight were Tesla and Alphabet. Market was looking at Alphabet again in the relation to the AI infrastructure spending and capex, whether the earnings are justifying the means. Now the market expected Alphabet to increase revenue. They beat the revenue increase expectations. Importantly, it was Google Cloud division of Alphabet, which is sort of their AI-facing division, that revenue was up 82%. So that's really giving a bit of weight behind the AI capex, and the spending is justified because investors are getting returns, the revenue's there, so the investment's worth it. Conversely, on the Tesla side of things, the market was more looking at their margins. Basically, it's the drive between the demand from consumers and the premium Tesla can charge for that demand. If there's less demand, they have to drop down the prices of their vehicles and their products, and that will compress their margins. In their earnings reports, the margins were compressed, so the market got a little bit concerned with the Tesla outlook from that point of view, and then there was no mention of Elon's robo-taxis or anything like that, which is sort of going to be heavily used in AI. The timelines are still pretty ambiguous, so markets got a little bit concerned on that. So a pretty mixed result. What that means for the wider sector is people still don't really know what's going on. I think if you look at the companies like Alphabet who are really investing in AI, but have got real returns for their structure, they'll lean towards those, whereas companies like Tesla, which sort of more sell hope rather than any tangible output, they're going to start struggling and fall behind.
Very good. And back in the Middle East, so some oil tankers have been attacked, obviously causing oil prices to rise. Yep. Is this in the same region? Yeah,
so we've talked a lot about the Strait of Hormuz, which is to the north of the Arabian Peninsula. What's happened now is Iranian-backed rebels to the south of the Arabian Peninsula, where the Suez Canal is up the north. There's a strait, I won't pretend to pronounce the name, it's an Arabian name, towards the south of that peninsula. They're now attacking cargo in that area, which they hadn't previously done. So it's adding a new layer to the conflict. Trump's also come out overnight and published more threats, now sort of going after infrastructure closer to the Iranian capital of Tehran. So that's still escalating. Oil futures are quite high, so expect when it opens up in a couple of hours that price to jump up.
And UK inflation wasn't too big a change from what was expected. Any movements on the markets on the back of that, or fairly quiet?
No, it sort of followed on with what we saw elsewhere in Europe and also with America, with headline inflation coming off last month. But the important figure was that core inflation, the CPI, which sort of strips out all the oil, the energy prices and the food prices, which are so heavily influenced by the oil price. So it kind of strips that back and looks what the reality is, and that was sticky and sort of held. But the market, as you said, was largely unreactive to it. The pound was pretty flat, and there wasn't much movement on the currency front.
So Australia unemployment rate out tonight. One of the bigger releases for Australia in particular is the unemployment rate. So what are we expecting, and what do we think could happen if those expectations aren't met?
Yeah, so we're not expecting to see any movement in the unemployment rate. To hold is at 4.4%. So if it publishes at that, don't expect to see any movements in the Aussie dollar or the ASX related to that release. Where we will see movement is if there is a surprise to the result, either on the upside or the downside. If the unemployment rate increases, that'll be bearish for the Aussie dollar, as there's less people in the workforce, which means less people with money to flow into the economy. Conversely, if it does drop, that's always seen as bullish for the currency.
Okay. And the European Central Bank, the ECB, so they've kept their rates on hold at 2.25%, and expecting not much change from that moving forward.
Yeah.
How does that tie in with the US dollar strength here?
Yeah, it's an interesting dynamic. We talk a lot about interest rate decisions and what impacts they have on currency, with rate hikes seen as bullish for the currencies. What the analysts are predicting here is, one, for the rates to be on hold, but two, even if there is a hawkish tone in the messaging about future rate hike possibilities, they're not expecting that to have any large supportive measure on the euro because of the strength of the USD and how hawkish the Fed is. The Iranian conflict boosting up the safe haven flows for the USD. So that the analysts are basically predicting the US dollar the strength is going to outweigh any strength that the euro may gain, even if there's rate rises in the future.
Okay, and then as we've discussed, another 1% increase in oil after that conflict, that strike on those tankers over there. So I think this is just going to continue as long as the conflict goes on.
Yeah, I mean, when it was looking at subsiding, when that memorandum of understanding was in place, it got down towards that $70 mark. It's back up above 90. The futures are at $95 this morning, so it's got a gap up on the open, and they're expecting it to reach $100 pretty soon as well.
And the ASX 200, so almost a 1% increase after coming off for the last week or so.
Yeah, so it sort of recovered a little bit, and this is basically just the miners strengthening up. The commodity prices ticked up a little bit yesterday, and that gave our big miners, which is our big portion of our local markets here, so they got some strength yesterday.
And the dollar Swiss franc here. Tell us about this one.
Yeah, not a big movement. Currency markets didn't really move too much overnight, but it's worth noting that these are two sort of safe haven currencies. But as we've been seeing the last couple of months, the US dollar strength is outweighing other safe haven currencies like the Swiss franc. So the dollar franc pair continues to rise.
And back on the S&P 500, this one's been one obviously that's not affected as much by the tech stocks.
Yep.
By nature of how it's composed, but we are starting to see the impact a little bit more as those tech stocks grow in strength and size. 100%,
just the pure size of these big AI-driven companies, just how rapidly they're growing, and the weighting they have in these indexes obviously means movements in those prices have more of an effect on the index itself. And we can see in the chart just how choppy it's been this week, and particularly yesterday on the mixed results. Markets trying to weigh up what factors do we look at more. Do we look at earnings? Do we look at geopolitical tensions? Do we look at the US dollar? Do we look at growth outlook? So it's markets just constantly trying to find a narrative and paint a picture, and what weight do they give to stories more than others.
And the chart of the day, the dollar yen.
Yeah, so this is one we looked at Tuesday, where I was mentioning about there was a bullish pennant that had formed, and what was likely to happen was a positive breakout. Got a bit of feedback that people would like to see whether I'm full of it, or if what I say is actually sort of, if the analysis we do is actually sort of on the right track. And then we can see on Wednesday, it did in fact break out on the positive side. So I'll be taking any commissions if anyone traded that. Of course, none of this is investment advice. But these are just examples of what our traders are actually looking at when they're identifying chart patterns, when they're looking at the fundamental analysis of what's happening from an economic sense. This is what they're actually trying to achieve and trying to front run potential market movements such as this. So yeah, we can see it's broken up above the pennant. The key risk here now is the Bank of Japan stepping in. So they spent, I think they invested in 11 trillion yen towards April to try and strengthen the yen and bring this price down, because it's now sitting at its highest level since the 1980s. So it's incredibly high at the moment. Obviously impacts the cost of living in Japan, which is a big thing for governments to worry about if they want to stay in power. People want affordable lives, so they're not going to keep a government in that's making their lives unaffordable. So this is something they're going to be really closely watching, and the market is sort of anticipating them to step in at some point, but what they are able to achieve, even if they do step in, is in the air. So we can see the RSI, which is a momentum indicator, has still got room to move on that positive side. So it's not yet exhausted. So it could still trend up and will likely trend up until the BOJ makes a move.
And the article of the day, one on Tesla missing its earnings.
Yeah, so this just dives into the Tesla earnings report, and it sort of explain what the reports are, and more importantly, how markets react to these reports and what they're actually looking for. So if you can understand that, you can sort of understand how these earnings reports tie into the market as a whole.
Thanks, guys.
Thank you.